Monday morning, 10/14/2019, and we got a full crew here for our halftime report with Tackle Trading. Coach Tim, Coach Matt, Coach Mark, Coach Cody. Boys, how we doing today? Maddie, let's start with you.
Tim, doing very good. Excited to be here with the halftime crew to kick off the week of the October 14th, and apparently it's Columbus Day today.
Mark, what's your mood? You in a happy mood?
I created a fun game for the podcast today, and so I like games. I mean, it's probably one of the reasons I like trading so much is I like games.
Yeah.
And I mean, it's always been a passion since I was a kid. My whole life, for crying out loud, all I've done is games.
Do you love games or do you love winning?
I like the process of figuring out stuff. So that's really appealing to me. I don't even like winning. I hate losing, which sometimes, that's a whole trading psychology can affect. And, I work on my own trading, but I like games. And I created a fun game based on birthdays, since it was Matt's birthday yesterday. And happy birthday, brother.
Thank you, brother.
I feel like whenever I play a podcast game with you guys, though, I'm like the guy getting ready to cross the bridge in Monty Python and the Holy Grail. I'm just going to get thrown off. I know that this isn't going to go well.
What's your favorite
it
color?
Doesn't matter.
So I can ask. I know, because I asked you your favorite color, and you're like
blue.
Green. No, yellow.
All right.
That is Tim.
I will look forward to.
So I'm excited for the podcast today that will be released later. Got a little fun birthday game.
Mondays are always a busy
downgrade
day.
my winning streak here. I love how you just
Tim's
bypass
he's got to spin it.
Matt, not everything's about you. It wasn't about you. This is my pain, not your joy.
Yeah.
I mean, they can both exist at the same time, but say la vie. All right. We'll look.
Matt, I see you switched your hat there. Are you going with the?
I wanted to say this publicly about the Miami Dolphins, and they got a win last night or yesterday. And their win was to throw the I see what you're doing. Yes, they did. They got a win yesterday, and their win was basically to throw the game at the end of the game. They literally were down 17-16 to the Redskins at home, scored a touchdown, went for 2 for the win, and threw a running back screen with no blockers. That's a win.
I had to go look at that, and I was like, that is the worst design.
It's the worst call. It's the worst 2-point call of all time, which means they're tanking. We all know it, but that was a blatant throw the game, because the Redskins might only win one game this year, and if they beat the Dolphins win one game, they get the tiebreaker, and the tiebreaker is first round pick. So, yeah, I decided to support my Dolphins today for the first time. They did their job. They lost.
It's got to be hard as a competitive person, though, to watch your team lose, even though you know that maybe getting that first pick is going to be a good thing. We're obviously big sports fans over here at Tackle Trading. That's why our company's named Tackle Trading. But, Matt, can you even stomach this? Is there some kind of silver lining knowing that you might get a top quarterback?
I watched 3 hours of football yesterday that I want to go back and redo. And I'll watch the Dolphins I'm a loyal fan. I watch the Dolphins every week, and it's like watching GoPro go from $30 to $3. That's how painful it is. But yet I can't do any management on it. So yeah. I'll say one thing that you're very, very famous for saying, or infamous. Say la vie, brother.
Say la vie. That is the nature of sports and football. There's no question about it. We'll talk more about all that. Let's get down to the markets here. Markets are dojing, but actually quite a bit of news in terms of international news with China. Some of their economic data was coming out. Not so good, Matt. Exports down, imports down. 15th straight month of car sales declining in China. The S&P, though, was moderately up here at the open, now kind of fading back on optimism of a trade deal, but then China pushes back and says, well, let's have another meeting.
Call it a deal. It's not a deal. It's not a deal in any capacity. In fact, we were talking about this on Friday during the halftime report, and I was talking about how whatever they sign, it's not a deal, right? And they ended up not even signing one thing. They basically, Trump came out and touted it as a beautiful deal, a great deal, amazing deal, the best deal that's ever been. It's like, there's no deal. China comes out over the weekend and says, we're not ready to sign yet. We want to continue to negotiate. I honestly, and I do believe this, guys, that China, they want a deal, but they want the right deal. Trump wants a deal. He wants the right deal. And I honestly believe this was just a bunch of nonsense just to delay tariffs.
If the boy who cried wolf parallel had not been created, like, wouldn't you come up with it now on this trade stuff? Like, how many times do you have to have a member of the administration say, we made progress, we're close to a deal, we have a deal, only then to find out that that is not factually correct? Like, how many times do we have to hear this in the last 18 months?
In the last 72 hours, Mark, we've heard Lighthizer say there's a deal. We've heard Mnuchin talk about a deal. We've heard Trump, get out there and do his, speeching about what a beautiful deal it is. We've heard, from Larry Kudlow, the economic advisor to Trump, talk about how it's a deal. And the simple reality is they're buying soybeans, guys. That's what they're doing. And that's the only thing that was agreed to. And that's something we've seen agreed to many times over the last 18 months during this trade war. So I mean, how many times do we have to say it? Buckle your seatbelts, guys. This is going to be an ongoing ride.
Well, yeah, but that broken record storyline, quite frankly, has been going on since I began, trading the markets in 2005. Whatever the themes are in the market, they tend to dominate for a couple of years, and it's like they never go away. Markets end up overreacting to short-term information, whether it's QE or the Fed, Matt, or whatever's dominating the thinking, the consciousness at the time. It ends up lingering for a long time. So I don't think it's that different from.
Yeah, but have you ever seen anything like this boondoggling going on?
Not from the political perspective, but the Fed. I mean, how many times did we wonder whether the Fed was going to raise or not? And even last year, the year before, are we going to go into a tightening cycle?
Like this.
Yeah, the Fed's been very transparent in recent years.
The last decade of the Fed, we've pretty much known everything that the Fed was going to do before they did it, Tim. They went 9 years without raising interest rates. Mm-hmm. They went years in a row without changing quantitative easing policy. So hate on the Fed, and rightly so, they deserve every ounce of that hate, but they have been much more transparent in the last 10 years than they were the previous 10 years. So I don't agree that this is similar to what the Fed has done. I think the Fed's been transparent. I think basically China and the administration has been lying to us.
Yeah. No, and the practical thing, and we have so much evidence on this that it's not even a question anymore. As the practical thing, and this is my opinion on the trade war, this is what I talk about in the commodities report, we just have to assume that we're going to get got every once in a while on a trade because news or something comes out on the trade war. We have to accept that as the cost of doing business. Coming from a gambling background, the rake, that little bit of money they take in a poker pot.
You play the vig.
You got to pay something, and you just accept that as part of the game. Or when you bet a game on sports. Now, that analogy seems to be dying because normally I would say the commissions we pay on trades, but those are disappearing, aren't they?
Yeah.
Yeah, that no commission anymore. But the reality of the situation is we call those things variables, right? As a trader, that's what we categorize those things. It's the variables of the unknown, right? And the unknown of what's going to happen with this trade war, the unknown what's going to happen with the recession, the unknown what's going to happen with slowing growth. These are variables. And as a trader, sometimes these variables play out and they're really, really beneficial for you. As a trader, sometimes these variables play out and they're not really beneficial for you. But what else are you going to do? Not trade?
Yeah, but that's the thing.
Not rate your stocks out in a wonderful neutral trend?
Yeah, I mean, you just have to accept that every once in a while this trade war is going to pop up and create some havoc. But like Matt just said, I mean, what is the alternative? Just not do anything? I have stopped worrying about the trade war and just accepted that if it gets me, it gets me, like anything.
Well, that means that you're well balanced and you're not over leveraged and you're trading as a professional, Mark. And that's what everybody else should take the lesson from. The news is going to be random. It's not going to go away. In fact, Matt, I made a statement in the pre-production show and you kind of laughed and said, of course not, Tim. I don't think a deal gets done before the presidential election, So I think this might linger on for another year, even longer. China's not in a hurry. I don't care what the news headlines come in. They're not in a hurry to make a 25-year trade deal. They're going to make sure they get their interests shown, and they might even have to wait things out.
And Tim, that's what you saw coming out of China over the weekend. That's exactly what you heard coming out of Chinese news media as well, which is basically from the state, obviously. And it was they're gonna negotiate the deal they want to negotiate. They're not going to be pushed to sign a trade deal that's not going to be good for decades to come and not days to come. I think that was a signal from China saying, hey, listen, you guys in America, you're putting the cart before the horse here.
Yeah.
We're not there yet.
Yeah.
We had good talks. And let's not bury that, guys. Both from the Chinese part and the US part, both of them talked about how the talks were really, really good. It was only from the American side where they were talking more from a deal perspective. In Chinese news media, you saw no word of a deal. You saw negotiations and you saw ongoing talks and you saw this, but there was no mention of a deal. The only deal that's coming out is on the American side.
Trump came out and the administration came out and said, hey, we're married. China said, no, I like you, but we're just dating.
We're dating. I'll consider an engagement.
I haven't met your mom yet.
Yeah, right. China's like, listen, that was a good first date. We're open for more, but hey, we're not in a relationship yet there. Hold on.
And I think
I think America proposed after the third date and China said, wait a second.
Well, I think the U.S. is probably legitimately saying that's not our first date. It's our 20th date. And let's get things done here. It's time to either have this thing happen or not. Let's close this deal one way or the other. S&P on a doji here today, Matt, up and down, back and forth over the last several months. Long-term weekly charts have a really concerning wedge in my perspective. Give me a quick weekly, daily, intraday, and break down the technicals if you can.
Yeah, let's break it down from a daily perspective technically first, Tim. We have the S&P. We did bump up the S&P in the Tackle newsletter from a 45 to a positive 40, just to kind of give that indication that 2950 was broken. There was some disagreements about upgrading the S&P, and I think, Mark, I think you were one of those individuals that were a little hesitant to upgrade the S&P in the light of kind of what happened with the profit taking that happened on Friday late afternoon when the news was coming out that a deal was done. But then when the details started emerging, it's like, okay, wait, nothing was signed. There's no details of this. And obviously the market started taking in a little bit of profit. And I called up Mark before we got into the scouting report meeting. I said, Mark, how are you going to rank the S&P? He goes, what do you mean? I said, are you going to upgrade it? And he's like, why would I upgrade it? It's still stuck in the range and I'm not buying all the headlines. And I think that was very, very wise of Mark, showed his veteran status there. But so there was some disagreement. I kind of felt like it was the Fed's last meeting where they had two Fed members not want to raise rates, and you had a couple that wanted to do a 50-point cut, and the rest kind of wanted to do that quarter-point cut. So there was a little bit of a tiny disagreement, but we did keep it there at the 40-yard marker. Slight upgrade because it did break out of that intraday and daily resistance area at 2950. And on the overnight action, Tim, coming when the Chinese news media started really kind of talking about how the deal was not a deal and how they were still ongoing talks and ongoing discussions, it was very, very amazing to see how the Chinese news media would not talk about a deal in any capacity, but that's the only thing we're talking about here in America. But when that came out on the overnight, Tim, you started to see a little bit of a sell-off coming into the European Open and then the European Cash Open right into here. On the overnight, it comes down, and where does it tick down into? Right there at about 2954, right in that zone of support at 2950. And that just shows you how important that 2950 level is from an intraday perspective. If you look at this on that 4-hour time frame, you can see 2950, and then all 2950, and then just kind of that sell-off over the last 4 hours looking at this retracement coming back into that 2950. You could see this, if you're looking at this from a day trader's perspective, you see this as perhaps a little bit of a buying opportunity with the stop loss underneath that 2960 or that 2950. So you are seeing some higher highs, higher lows starting to develop on those intraday charts. So that is certainly something to keep an eye on. However, I do think from a daily perspective, this breakout of 2950 is just, it's showing a slight bullish nod. I mean, we obviously have a bullish lean on our newsletter here, but as long as you're underneath that resistance level of 3,000 by 3,030, you don't have a lot of upside potential here, T. So from a trader's perspective, I just don't think you can get aggressively bullish until we start reclaiming all-time highs and start to see a true trend really develop. So slight edge on the bull side, still neutral, but slight edge to the bull side with that upgrade. Looking at it from a weekly perspective, you're still seeing slowing momentum. You're still seeing the potential double top form. Now, We don't know exactly what's going to happen in the future, Tim. This certainly could come back down to 2,800 and form that M formation to get everybody freaked out about. But as of right now, in reading this, based on what we're seeing in the chart, you see a little bit of a cup and handle triangle formation, ascending triangle, cup and handle formation, which tells me if we do end up breaking out of 3030, you should see a new trend develop based on what I'm seeing on this weekly chart. But we got a long ways to go in front of that. Obviously, we're going to be talking trade this week. There's no doubt about it. Not a lot of economic activity this week coming out of America, though. On Tuesday, you have a couple Fed speeches. On Wednesday, you do have retail sales, so that should impact consumer staples, consumer discretionary type stocks. So if you're a trader of those types of stocks, investor of those types of stocks, retail sales is going to be fairly important. And then you get some housing data with building permits and the Fed Philadelphia Manufacturing Index that is coming out on Thursday. Oil inventories are coming on Thursday, not on Wednesday. And I'm assuming that's because of Columbus Day this week. But so it's a very, very light week economically, which means our focus is going to be two things. Number one, geopolitical. We did see economic data coming out of China that was not very good. Tim, you mentioned it earlier in the halftime report today with Chinese retail sales and Chinese exporting, Chinese importing. I mean, the importing was amazing. It was down, I want to say 10% year over year, 3% year over year on exporting. But what's amazing, though, is what the U.S. numbers. U.S. importing from China is down 10% year over year, obviously putting a lot of pressure there on China. Plus, you mentioned about their automobile sales down 15 consecutive months consecutively, Tim. So we did see economic data coming out of China. We're going to see a little economic data coming out of the Eurozone this week. But I think if there's three things we're focused on this week, number one is earnings. Earnings. We have a boatload of earnings to go through, starting with a lot of the banks, Bank of America, Citibank, Goldman Sachs, Charles Schwab, Wells Fargo, and Morgan Stanley, all reporting earnings. You also have a couple healthcare stocks in Johnson and Abbott Labs, and then you have some industrial stocks. But I think Netflix is the big one here for the market. Netflix reporting later on this week as well. So earnings is number one, trade news is number two, and Brexit is going to be in the news. I know we're all sick of Brexit 3.5 years later, but we're coming down to that end of October deadline, and the EU came out today and said not good enough. So we're going to have Brexit in the news here this week as well.
Yeah, didn't they?
Do you think they're going to hard Brexit? Do you think they're actually going to walk?
I don't know. I mean, that's the problem. We don't know.
I mean, because that they say shocked the world with Brexit initially, with the vote itself shocked the world. Like, do you think that Boris Johnson's going to be like, all right?
I think Boris Johnson has painted himself into a corner, and he's going to have to.
Because that could be a big
unless Parliament steps in and does something. And I'm not an expert on UK parliamentary policies, but who knows? I mean, is the correct answer? I mean, honestly, but Johnson's painted himself into a corner on this one. I think the most likely scenario at this point is a hard out.
Hard out would not be good for the pound. Obviously, the pound dollar cross pair has had.
Or they can do what Trump did on Friday and just declare victory and walk away.
Yeah, they can't. They have not won on this one. Let's be very
clear.
You
mean we can't just declare a Vietnam victory and just go home?
Or you can say whatever you want. Doesn't make it true. But I'll tell you, that whole Brexit thing could be a wrench in this whole market volatility. When you mentioned the Fed, though, Matt, when I looked at the economic calendar this morning, it's all Fed speeches. And I don't know if those Fed speeches
in elevators. That's what we're calling speeches these days.
Yeah, I mean, what happened to the economic calendar where this is important when Bullard gives a testimony in front of something? Is that just a reflection that there's not a lot going on from an economics perspective?
Are you kidding me? George, Bullard, Bauman, Evans, Williams, George speaks again, Clarita. They all speak this week. Powell does not speak this week. But in my estimation, none of those are as important as building permits.
Mm-hmm.
And they have the same economic color in terms of what it means to the market. No, I think we're all sick of the Fed.
Yeah, we are. And those earnings are going to be dialing up here hot and heavy this week. This week, there's some stuff that's really important, like Netflix, like you mentioned. But really, for me, it kind of kicks off with all those financial companies as well. Mm-hmm. The banking stocks, there's so many banks.
Especially with all the repo actions recently. Mark, you talked about the repo actions in the tackle today. Mark, explain what a repo action is to the community.
And I don't want to complicate this because I don't fully understand it myself. And I have a long-standing rule that unless I know something 100%,
to be real.
Better,
yeah,
it is better to. Your word is important, and
Absolutely.
like I don't understand it entirely 100%, so I'm not going to sit here and pretend that I do. What I do get a sense of, though, is that the Fed is massively committed. They are shoved their pot chips all in, saying we are going to do everything we can to stave off a recession. Every bullet we have in the chamber, we are going to do everything we can. But as far as the specific repo actions themselves, I don't know enough. What? I mean,
yeah. It's basically bailouts to the banks, basically, is what it is. But it's amazing to me, Mark, what you just said. And it's so true that the Fed's going to throw everything they can at the market to stave off the recession. What are their tools in their bag when a recession actually happens, though?
I mean, but that's what we've been arguing for years now.
Yeah.
Is like when you preemptively try to do all of this, buy back 60 billion in banknotes. And why is the market not rattled a little more by bank instability? Is everyone like me, like they don't fully understand it, so they're just like, wake me up when the train breaks?
We saw this in 07, though. I mean, we saw these types of things starting to happen in mid to late 07, coming into early 08. It wasn't until Lehman Brothers was declared bankrupt that people really kind of was like, oh, there's really something wrong here. And the market was already down 30% before that. It's when some black swan happens, when people actually wake up and are like, oh, whoa, something's wrong here. Well, guys, something's wrong here. The Fed wouldn't pump 60 billion in repos a month. They wouldn't pump 40 billion in quantitative easing a month if things were going great. They wouldn't need to do that.
You know, and I'll admit, and you know, a lot of times I will dive into a story. In fact, most times I'll dive into a story. Like I get lazy when things are in a consolidated trend.
Yeah.
Like when things are in consolidation, especially when it's kind of in the middle, kind of where it's hanging out. I'm like if it's that important, I mean, wake me up when there's a support test, you know?
I like lazy consolidations.
I love them. Are you kidding? That's all
happy.
I like these days.
Absolutely. I mean, Matt, we've said it a million times. If you're making money while you're bored, stay bored.
Stay bored.
You don't have to have market action just to have market action. In fact, a doji is a beautiful thing if you've got theta in your account or you know how to execute your system. So, Mark, I love these lazy consolidations. And if the market breaks and run, great. I'll have to adjust to it. Right now, for me, I'm staying pretty balanced, guys. I'm pretty neutral.
Yeah, until we start reclaiming 8,050 on the NASDAQ, 3,300 on the S&P.
Yeah.
And when you're looking at the Dow Jones here, instead you start reclaiming, 27,400. Stay neutral. Stay neutral. Stay positive theta. Stack theta. You've said it for months now, Tim. Stack theta. And if the market does break out, be here with us. And we're going to be like, market's breaking out. We're going to adjust. And you'll see it in our newsletter. If we bump up the S&P from a 40 to a 30, it's because we're seeing something in the charts that are bullish. And until we start breaking out of these ranges, you're going to see some degree of 40 to 40.
One chart I want to look at, though, Matt, is the Russell 2000. I do think it has the only notable difference against the other indexes. NASDAQ, S&P, and Dow, they all feel almost identical. I look at the Russell, though, I don't see identical. I see a little W pattern off his support. Marty the Elephant did hold, hit the trampoline, start coming back up here, Matt. But now we're back into some moving averages. Is this just a perfect neutral condition for those condors? We're going into earnings season, because the last time we got stung on the condor was in the earnings season last year in October, and then December into the rally into January contracts. But would you have any kind of hesitation putting that condor trade on right now?
I wouldn't have hesitation. No, I mean, you're stuck right now in the range until the range gets broken. I mean, don't question it. That's how I see it. I mean, yeah, last October, I'm not sure it was earnings, but last October, we started to see the volatility increase. I put a lot more emphasis on the trade than I did earnings that year. But we've seen bad earnings over the course of the last 4 consecutive quarters. So it's gonna be interesting. For me, the question isn't Does earnings increase the volatility? Because obviously it does. Does it increase the risk? Yes, it does. But the most likely scenario is we're going to be stuck in these ranges here. Can earnings be a catalyst to move this market is the better question. In my estimation, coming back to the S&P here, can earnings, and I want to ask you guys this, can earnings, if we see a better than expected earnings result, and better than expected is better than pretty bad, but if we can still see a better than expected earnings season, can that better than expected, still not very good, propel the S&P to break out of that range and see some type of typical trend type develop?
100% yes. There's no doubt about it. In my estimation, and Mark might have a different take on this. We'll hear his opinion here next, but I think
I just got sucked in by 100%. Like whenever someone says 100%, the debater in me is like, well, I'm going to find the 1%.
You find that opposite angle. That's fine there, Mark. They've lowered the bar enough, Matt. Everybody thinks they're going to miss on earnings, right? And we have all this expectation that corporate profits are down, trade war risk. We've heard CEOs talk about it so much. We know the games these companies play. They lower that bar so that if they come in and beat it, they can then have some upside as well. I do believe the market has the ability through earnings season to break and run. And that's kind of, doesn't mean it will, by the way. It does not mean it will.
Well, and it can work the opposite end too.
Yeah, sure can. Right? Yeah.
I mean, I think I would say most people expect earnings to always be positive. Like not a whole people expect it to be negative. People think about buying things. People think about price appreciation. People think about markets tend to have a tendency to go up, and those things are true. But to me, I think earnings certainly could have the ability to break this trend. There's no doubt about it. But I don't think that's going to be the case until we start seeing some of those bellwether stocks, the Apples and the Googles and the Amazons and the Facebooks and that. Can the bank stocks this week be that catalyst? I don't think they can. I'd be
surprised by that. No, I don't think that's a different question. I don't think the bank stocks are going to break the market out and run it. There's too many other variables, right? So I'm with you. I think you got to get back into the actual real companies that we're going to be tracking: Dow Jones industrial companies, major mega cap companies.
We've played this game before, Tim, in early earnings season. We've seen this so many times. We get so fixated on those bank stocks. Like I said, Bank of America, Citibank, Goldman, Morgan, Charles Schwab, Wells Fargo. We get so fixated on those bank stocks. And then I guarantee you, after we see those earnings reports this week, what are we going to say? Well, we got Apple next week and we got Amazon and we got, we'll start playing that game of, well, this one was okay, but let's be a little hesitant until we see Apple or until we see Amazon or until we see Google or until we see a Microsoft, those 700, 800, 900 trillion dollar companies. And by the way, Saudi Aramco looks like they're going to get a green light this week for an IPO in the 1.5 to $2 trillion range. So that's going to be interesting to see how that plays out this week as well.
Lean on the 2 trillion side. That company is incredible.
I'm actually leaning on the 1.5.
It's going to be fascinating to watch. I mean, we're talking about the biggest company of that size.
Are we going to have a lunch bet here?
Let's do it. Lunch bet.
Lunch bet. I say closer to 1.5. You say closer to 2 trillion. 1.75 is the break off.
Now, the IPO list or the actual valuation after the day it opens on the exchange? Because those are different.
Not after the public. I'm talking their pre-IPO listing coming out this week.
Fine. All right. If I have to buy you lunch,
I saw how you tried to game it. I saw what you tried to do there.
So what side is Tim on?
2 trillion.
Tim's on the closer to 2 trillion. I'm on the closer to 1.5.
Yep. As I look up and down the earnings reports this week, Matt, we didn't mention a couple other big ones, Coca-Cola and Johnson & Johnson. You do have United Health as well. We do have some big names that are consumer staple companies. We'll keep breaking it down day over day over day as we get through the markets.
Hey, I got a question for you guys. I want Mark and Tim. Okay. On CNBC today, I saw a couple option trades that they recommended. Okay. And we're going to play a tiny little game here to see if you agree with it.
I am in such a general mood, and you're setting me up to get me all fired.
I'm not setting you up.
I'm very peaceful, I promise you. Right now, or relaxed.
Okay, I am not setting you up at all. I just want to see if you agree with this. Recommend buying a call option on JP Morgan. Yay or nay? That's all I need.
No. Based on what?
Yeah.
based on your own analysis.
Right before earnings too.
So they said,
Was it Jamie Dimon on CNBC?
No, it's Dan Nathan.
All right. So
they said buy a call option.
They recommend buying calls on JP Morgan.
Heading
long
into
call
earnings.
into earnings. At resistance in a complex technical
I
pattern.
literally, and this is not a lie, and this was going to be one of my live reads in the podcast. My goal today was to not say one negative thing. Like I woke up and I'm like, I'm really trying, because I have a tendency in life to be a little bit negative, because
it does have a higher level of support there, Mark.
If you listen to freaking CNBC, see, this is the thing. I'll start my goal tomorrow. I'll go to the gym tomorrow.
Oh, I'm sorry. I'm sorry. I'm sorry. Let's get back to the positive. You might agree with this one, Mark. Okay. Consumer Staples ETF XLP. Consumer Staples. Recommendation was a put spread on the Consumer Staples ETF.
Wait. Based on who are these people?
I'm just saying a put spread.
Based on freaking what?
Hold on. I got one you might agree with. I can't believe people follow this nonsense. Buying a put calendar spread on Netflix with earnings this week.
I might be able to be convinced into something along those lines. Pre-earnings, though, I would not do it. But I could at least try to be curious about the logic. The XLP one literally is one of the
only thing that makes sense here is that they're doing things into earnings. So if by chance they hit big, they're like, hey, look at that.
Consumer Staples doesn't have earnings, Mark. You're going to play puts against the consumer staple market.
Okay.
One of the hottest stocks out there.
I don't understand. Okay, it's just irresponsible. It's bad. It's stupid. Those individuals, literally, if there was a producer of the show, they should be reprimanded for such irresponsible trading advice to a broad audience.
Like, the worst one is JP Morgan, in my estimation, because as long as you're with the spreads, you're doing a little bit of risk aversion there. But buying call options in front of earnings with implied volatility going to crush on that, which means you need JP Morgan call options to move 1.5 times the market maker move, which means you got about a 20-25% chance of being profitable on that trade.
And that's important.
Oh, man.
See, here's the thing. And if you're a brand new trader out there, by the way, welcome out here. Hashtag Team Tackle right in the chat. Everybody pop in and say, good morning, happy Monday, say something positive. Let's get Mark's attitude back up here. I don't want to drag him into negativity, but what Matt just said there was so important. Market maker expectations are built into call and put options, Matt. So not only do you have to be right on the direction, you have to be more right than the market makers. And somebody's telling me they know more than what the market makers are setting pre-earnings on long calls into a bank stock like JP Morgan.
Okay, once again, let's argue. Let's say that they have thought through a thesis, all right, on whatever it may be, and they think this and that. Fine, whatever. But to try to give that advice to a broad audience who may or may not, their familiarity with options and their familiarity with volatility and the familiarity with how this works with earnings and how volatility can drop off quickly, to a broad audience to try to give that advice in an earnings season, to me is criminally irresponsible. Like it should not be allowed to happen by law.
Yeah.
Bad.
I think it is that bad.
It's pretty bad.
Personally, I think it's really bad. I think the XLP thing is one of the dumbest things I've ever heard.
I think the XLP thing is like.
And by the way, there are some subtle momentum changes in XLP, Matt, but you're riding an uptrend over the long term. You have 25% year to date in a sector where people have been buying for.
They are essentially guessing when the trend is over by saying that.
Yeah, they're trying to pick a top.
They're trying to pick a top and saying, yep. And anybody that has been around markets at all and traded at all, it would seem to me that these people have never traded.
Yeah.
Because like if you're trying to pick tops and when trends are going to be end, boy, I don't like your chances long term. Every once in a while you might get lucky, but just ride that trend.
All right.
I can understand the put spreads conversation. I even though I may disagree with it, I can understand that conversation. I don't understand buying call options on JP Morgan before earnings. That is that is the quintessential dumbest thing that you can do as a trader.
Do you have inside information? Then it makes sense.
So we just made up a new section. I think we're going to call it Dumb or Dumber. And we'll compare two bits of advice.
Or dumber.
Dumb or Dumber, and which one it is. I love it.
Listen, it is so important for each of you to eventually graduate where you don't need any of us, and you certainly don't need those schmucks at CNBC, and that you do this yourself, that you get good at analysis.
Well, I would push back on
analysis.
that. And that's not even just to sell tackle trading, by the way. I would disagree with that. Even as a 15-year veteran, I need you guys. I was gone over the weekend, Mark, traveling, teaching a class for legacy education. And I came back, and you know what the first thing I did? Look at the scouting reports.
Yep.
Right? Because even as a veteran, you don't if you can get something done for your time, you guys are out there bird dogging candidates. So
do you know how much time I save on a weekly basis?
Oh God,
because the bird dogs are scanning for us.
Yeah.
So I get
that deals with specific picks. Get to the point where you know exactly what we're doing for you.
Correct.
Like become self-reliant is basically what I'm saying.
I'm with you, brother. I'm with you.
Yeah. The moment you try to do everything on your own is the moment the market tries to steamroll you.
It's true in life
if
as
someone's
well.
going to do all my work and bird dog all my picks and do all that kind of stuff, that's another thing.
Yeah, for sure. We got to keep working through markets here, guys. Crude oil, natural gas, some of the commodities here, Matt. Crude oil is down 2.5% here today. It found a bottom down there at support. Saudi Arabia did have your back there, Mark, but I'm very concerned about this chart. There's no question about it. You've got a backfill, pivot, candlestick. Not a lot of volume on the sell-off. What's going on with oil, Mark?
I just get a kick. Is there ever an oil chart that you're not concerned with?
I know you and I, we see this thing differently. You see it knowing that it's probably got demand and support, and I do as well. But I'm concerned about the economy and thinking, well, if 50 does not hold, my put spread's going to get blown up, and so I've got to be aware of it.
Yeah, but that's a big if.
Yeah, I know.
I mean, you're talking about a support level that's held for a long, long time.
All year long.
And if it breaks, what's your trade management technique? And that's what I teach people all the time in dealing with support. Like, listen, we assume support is going to hold, but every once in a while it's not, right? Happens. What's your plan if it doesn't? Having a concrete buy rule. So support breaks, this is what I do. So you have what? A put spread?
I do.
So what are the parameters of your trade?
46 by 45.
I use the
you have a bull put
futures.
spread.
I do.
Yeah, it's a bull put spread.
So I have a cash flow trade on. I actually have this as a condor at this point. I added the bear call, Matt, deep up at the 64, 65 strikes as well. Wasn't a lot of credit, but I kind of balanced it out a little bit. But Mark, if it does break support, I'll do the same thing I've done for years. I'll hedge it and I'll move on.
Yeah, I mean,
so I have a plan. Don't get me wrong, but you can't say that that's not a bad candle. That's a red candle after it was down for 3 weeks in a row.
If you're worried about a credit spread when support hasn't been violated, I don't think you should be.
Well, he doesn't believe in oil, and so he's always he thinks in his head oil's going to $35.
No,
and so
that's not true. I'm concerned that if the market turns down, this will be one of the first products taken on the chin. Would you agree that this is an aggressive area of the market, that when you rotate out of risk into safety, that crude oil can become very bearish very quickly?
Well, it's not exactly been robust for a while now.
Right.
But you got a technical area. Like, support doesn't always hold. But if you can come up with a system in your own personal trading that says, I'm going to bet on support holds, and then, like you said, Tim, manage it, hedge it, do whatever you do. If it doesn't, boy, I like your chances of making money.
Yeah.
Because support has a tendency of holding.
Support for a reason, guys.
I mean, that's the reason we call it support.
Yeah.
And we didn't come up with that term. Like, that's in the trading lexicon 101.
For sure. Gasoline looking same way, crude oil, Brent looking the same way. But the one I want to look at real quick here, Matt, is natural gas. I was not in the halftime report on Thursday and Friday, and I know nat gas started to make a little bit of a comeback. I do like the neutrality here. You know that I've got those spreads down there way deep out of the money, Matt. It's still kind of a slowing momentum. Neutral's a reasonable position. Would you agree?
Oh yeah, I mean, you got to be neutral in natural gas right now, and if you are trading natural gas, it's based on spreads. You're not doing anything naked. I can't remember who asked in the clubhouse, or basically our Facebook for our community over there at Tackle Trading, but somebody asked in the clubhouse about how they approach crude and natural gas, and from a naked put perspective. And I said, I used to do naked puts until I realized that it's very aggressive. Naked puts in the commodity market is. I don't think naked puts on USO is aggressive, for example, but I think naked puts on crude light in the futures market is very, very aggressive. And no trader should be doing nakeds unless they are professional type status. But over the course of years, I just really prefer the credit spreads in this area, just given the fact that you can really kind of lock in your risk, and kind of going into the trade what the worst case scenarios are, and you can plan around those worst case scenarios. Naked, it's much more difficult to do that. So, from a neutrality perspective on natural gas, I certainly believe that you can write credit spreads in this environment. But one thing just to keep in mind here, and we've seen this over the last few years, coming into November and December, we typically see natural gas fairly volatile. And a lot of times that volatility is to the buy side of the equation. So it's going to be interesting to see how that is impacted coming into November and December, given the fact that, natural gas is really kind of down 20% in the last just, 2-3 weeks. Now, your credit spread down underneath 2. Let support at 2.1 kind of work. But at the end of the day, that's how I would approach it. I have not gotten back active trading natural gas the same way we do crude. So I'm still kind of sitting on the sidelines here until we start to see some type of seasonality kind of play out in November and December.
I love both techniques, naked put and bull put spread. It depends on the product, obviously. And if you're out there and you are a trader that has been in our community for a long time, a naked put on an ETF you're willing to own, it's very different than on the futures market, obviously, Matt. I'm with you 100%. I don't want to work that hard. I don't want naked puts on futures because then I have to check it a lot more than what I do right now. And I like the lazy cash flow. There's no doubt about it. Kind of laid back and let the markets work for you.
No, I just want 2 cents because this is a topic I spend a lot of time talking about. I only teach naked puts if you're willing to own it long term. I actually do not refuse to teach naked puts or naked calls outside of actual ownership.
I think it's a lot more responsible way to trade.
I think naked puts and futures are so aggressive.
I've seen students do so many irresponsible things when it comes to naked puts and calls that I just refuse to teach.
And specifically in futures, because they don't understand how margin changes. Right. They go into the trade with the initial margin, like, oh yeah, that's my risk, blah, 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 like they do in stock. And it's like, no, that's not your risk. It's not your risk in stock, and it's not your risk in futures.
And students sometimes, and new traders sometimes, they abuse margin. They think, well, I have all this margin, and so I'm going to sell some naked puts. And they don't understand the math of how it's reflective if they actually took ownership on it.
Yeah, I agree.
Well, can I talk about that very quickly? Because sure. I do think it's an important point. Say you're looking at, give me a stock that you guys wouldn't mind owning. Don't care.
Let's say GDX, the ETF.
Disney. Let's
do GDX. Okay. So
it was your birthday, and I know you love Disney. I was trying to give you a little late birthday present there.
I do love Disney. There's no doubt about that. I love Disney stock. I hate Disneyland. There's a difference there. But GDX here, let's say let me put this on a weekly chart. Okay. And let's say, okay, I'm willing to take ownership down here around the 23 level.
Yep.
Okay. I'm willing to take ownership in that level. So I come here to the trade tab and I say, okay, I'm willing to take ownership right here at the 23 level. Let's bump that up. Give me a 24 level. So I'm willing to take ownership at the 24 level. And let's just say I'm just selling one contract. I'm getting 9 cents on the credit. So I'm getting 9 cents on the credit for a buying power of $240. Well, that buying power only reflects 10% of the equity value, right? And so a common mistake people make that Mark was talking about is they position size their naked put to fit the parameters of their investment objective. So if I'm willing to buy 100 shares of GDX at $24, guys, that's not going to cost me $240. It's going to cost me $2,400 in an IRA, and that's going to cost me $1,200 per 100 shares in a margin account. So if it does get put to me, I need to come up with the other 1,200 shares. What you have to do in terms of naked put to ownership is position size according to ownership and not according to how much cash
Matt,
flow
will you say that at least 2 more times? Position size.
When you sell a naked put in the stock market, you position size to ownership and not to cash flow. because the only time you sell a naked put in the stock market is when you have a desire to own something. That's your desire.
Position size to ownership, not the margin, not the margin or buying power effect. Is saying how much margin would take if you had to take ownership. Do that mathematical calculation, which people don't do.
Yeah, they don't. They look at the buying power and they're like, oh, that's my position size. I'm willing to take that position size. Well, you need to come up with at least 40% more of the capital. And so what happens with a lot of people is that they'll over leverage themselves on naked puts. And then something happens and GDX comes down to 24. And all of a sudden you're on the hook to buy 100 shares of GDX, but you only have $240 in your account. Obviously, I'm just doing a one share, one contract type agreement here, but you have $240. You don't have the other, what would that be? $960. Well, the broker's going to call you up and be like, hey, you need to give us $940 more for this. And you're going to get a margin call. So you have to position size to ownership of the shares at the price threshold that you're willing to buy.
And why it's so dangerous is you get that margin call, which means you've done something to potentially blow up your entire account.
Yeah.
Yeah. Well, and even going back to the original thought that started all this, and this is amazing, guys. I love the conversation. It's with the futures options. Not only can you blow up that account, but you can go net debit because the expanding margin in the naked puts on like crude oil.
Futures get even way worse.
It's a little crazier.
If it's a slight problem, I don't know. If it's a problem for new traders in the stock market with naked puts and position sizing rules, it is an epidemic in the futures market. I see it all the time in the crude oil. New traders be like, oh, I only have to put in $300. Oh, and I'm getting $70 on the cash flow. Oh my goodness, I'm getting 90% probability of cash flow and 25% returns. That's amazing. Yeah. And then something bad happens, and all of a sudden their margin just blows up, and they get a nice little phone call from the broker. You owe us a bunch of money, but I position size. It's not even threatening my strike price. You don't understand how it works. So, I've shied away for that reason from naked in the futures market. I think credit spreads are much better because you're going into this trade knowing what your max potential loss is. You can position size according to those rules. But in the stock market, again, just go back to what Mark asked me to do, say it 2 more times, position size according to ownership position rules.
I love it. I love it. Take a look at gold, if you will, Matt. I know
I kind of am right now, and I'm kind of
GDX.
This weekly chart on GDX looks pretty decent. Weekly chart still looks pretty decent here on the gold futures market as well. You're just stuck in the same range, Tim, that you've been stuck in. It's fade. That's all it is. It's just fade.
I said it a month ago, gold has found its short-term price. It is $1,500 an ounce, and it is not moving off of that too far up or down one way or the other. Going to be interesting watching that, but palladium continues to be a juggernaut. You've got that fading chart on the daily. You've got a beautiful chart on the weekly. Gold's got some
interesting symmetrical triangle forming here on gold, though. You do have a decreasing short-term resistance with an increasing intermediate support level. That is a potential trade above that line right there, boys.
Mm-hmm. Yeah.
That is a potential trade there. So keep an eye on that. You wanted to look at palladium or platinum?
Palladium, real quick here.
Platinum's kind of just stuck in the mud right now. Palladium is
a juggernaut.
I'll put it like this. We had it on the 10-yard marker last week, and we were looking at it on Friday, and as all the coaches at Tackle put in their numbers for ranking everything, it was actually to get downgraded to the 20-yard marker. And I remember me and Frank looking at it, and both of us kind of like, you guys are going to downgrade a breakout? Yeah, we're not going to do that.
No, I can't do that.
Not going to do that. And obviously 1650, 1660 is kind of where that's that holding here. But quietly, palladium just showing true strength here. As you start seeing the gold and silver markets start to kind of struggle there in the short term, palladium here is just taken off. And I just want to remind people what palladium can do when it decides to find a trend. Look at the consistency there. Look at the consistency there. Have a bunch of neutrality, and you're starting to see the consistency here. Guys, this is the start of something in my estimation on palladium.
Yeah, there's no doubt. It's been a continuation.
Let me not say the start, continuation of something.
For sure, and it's been there the whole time. A lot of companies that are
Google's
catching my eye
messing up.
today.
Google's not allowing me to like the video, by the way.
It won't do that, huh?
Mm.
Everybody give me a quick thumbs up. See if it works on your side. That'd be interesting. I was clicking the thumbs up earlier and it was not doing it either, but we've got
No, it's not letting me either.
24 thumbs up. Maybe it's a Google Chrome thing or something.
I got
like
23 on my side, but something's going on with Google today.
C'est la vie. Maybe Google is being hacked. Who knows? Let's take a look at the US dollar index.
I click it and then it literally unclicks.
That's what but then it just popped up to 29. It just popped up to 29, which
those
means
might be the students clicking. Yeah.
Well, I hope
I don't know.
33.
Maybe we're not allowed to click as contributors.
Maybe that's what we have to do to get likes.
What? Like point out the fact that nobody's clicked and make them click it?
Yeah.
Yeah.
Listen, what's funny is like I'm always the type that's like I'm not going to ever ask anyone for a like, but my kids love YouTube videos like kids do. I mean,
you see them all the time.
Love and the kid videos. They'll go through this 45-second thing. Be sure to like us and then leave a comment. And this whole routine, basically, and it's just standard. It's just common. It's like expected now.
Yeah.
So don't be afraid to like us.
Yeah.
Boy, I just feel uncomfortable. I'm too old to say that.
We're good at analysis and bad at promoting. Let's just face reality.
I'm
We're
too
too
old to say
promote.
like me on Google.
Hey, Mark, I want you to give me a 10-second like and share promotion.
Okay, I'm in a good mood, but that ain't gonna happen.
Self-promotion will not happen from Coach Mark, so I'll do it, guys. We come in here, do our tackle trading halftime report each and every day. We love coming over here. If you guys enjoy it as well, give us a thumbs up, like, and share, and get it out there. And Matt,
together, Google.
Let's get together. All right. $DXY here, Matt, hitting the trend line. Doji on the little green candle here. I like the long-term uptrend in the dollar, but there's some momentum concerns, and that 20 did fail, Matt. I see the candles kind of rolling in here. Still slightly bullish for me, but I would have downgraded this like 5 yards as well.
We did. We downgraded just slightly. Obviously, that the short-term trend had been violated when this pivot failed. And Cody, did you see the tweet I made with you?
Oh my God. I was actually laughing out loud. I was rolling when I saw
I gotta show it.
Oh, so just thinking about it, that's hilarious.
I saw this on Twitter the other day. I can't remember what it was, but I remember I tweeted Cody.
A rare shot of Cody Mack.
a rare shot. Okay, so here's Cody. This is Cody holding on to his euro dollar trade last week.
Oh, that's incredible. Good for you, kid. Oh, that's
so we downgraded it for those reasons that it failed its short-term pivot. But let me remind, this trend has been fairly consistent right here all year long. So, it's sitting right there at the 50-day moving average as well. You got an increasing resistance. You still have increasing support levels, although I'm a little concerned about that. So we did downgrade it in the face, but I think the reason we didn't downgrade it even further, Tim, is we didn't buy the Brexit news.
Yeah.
And I think that was across the board in the meeting on Friday and I went around asking people, do you guys believe in the Brexit news? And to a T, it was the same way with the trade war. Everybody's like, no, I don't believe it. No, I don't believe it. No, I don't believe it. We've heard this talk, and we're all sick of the talk. So let's see something on paper. Let's see Boris Johnson actually negotiate with the EU to have that clean out there. So I don't think people bought the Brexit news, which really kind of drove the dollar down. Now the dollar's sitting on support. We'll see what it does. I will tell you though, if we do break that trend line with any degree of force, you'll downgrade the dollar into neutrality at that point.
Yeah, and a neutral dollar might actually allow gold to kind of find some support.
Oh yeah, I would not be sad if that dollar does break its 98.50 support channel.
No, I actually kind of would like to see it come down a little bit. Let some of the commodities pop and run and maybe develop, but we'll let the market decide that. It's not up to us. It's up to us to trade the price action. Sectors, Matt, there's a lot going on here. Probably don't need to go through each one of them one at a time. I'll just say go watch the newsletter. The one downgrade I was very interested, want to get your take on, though, utilities. You guys pulled it back, and it is down here today.
We did downgrade it. We did downgrade it. We downgraded into the positive 25 territory. We got a little concerned with the risk on mentality in the market, given the fact that they were buying the trade news at the time. We also got a little concerned that resistance held here. And then we started seeing the sell-off coming in later into the week. So we're still bullish here, T. It's still our number one rated sector at tackle trading is the utility sector, but that did get a downgrade. Slight upgrades across the board in some of the other sectors, like basic materials got a slight upgrade in XLB to the negative 45 territory. So we had it in negative 40. XLB got a slight upgrade because support held. Communication, same thing, got a slight upgrade because support held. They're underperforming the market, but they did get an upgrade because of support. Energy got a slight upgrade into the negative 45 territory as well, just given support. However, this still is a sector that is under tremendous pressure, forming what is called a cup and handle, inverted cup and handle formation. Keep an eye on the energy space, guys. If that support level is broken right there, it could be free falling there. Play a little Tom Petty when that happens. Industrial space got an upgrade. I think the one sector, though, that got a little bit of an upgrade above everything else was the technology space. And as you can see, the technology space doing a little bit better than the market, showing increased support levels, broke out of this little bit of a range that we saw here. And if you look at this on that 4-hour chart, you can kind of see that range develop. And then when it broke up above that, so because it's outperforming the market, technology still hitting its head on resistance, but a little slightly higher than the S&P 500.
And then last thing I want to kind of, talk about here before we do any kind of promotion or, announcements or whatever it might be is the reports. Guys, I went to the reports. I got to tell you guys, amazing job that last weekend. I'm looking at the option report just right now, Matt. When you come in on a Monday morning, you're like, okay, I got to find something to trade. The market's not doing anything. And I'm finding so many viable breakouts on this option report. It's incredible. I mean, I'll just give you a one that just grabbed my attention. Celgene on that high base breaking out. It's actually
a good one.
A lot of strength, 100, things like that.
And Tim, we had a really good conversation on Celgene because there was a lot of pharmaceutical companies that were under fire, right?
Yep.
And what we had noticed on Celgene is from a technical perspective, it was breaking out where the rest of the sector was underperforming. And I actually felt you had a fairly decent type pairs trade with, long Celgene, short some of the other pharmaceutical companies. I like the Celgene call because it broke up above a very significant whole number. It had an ascending triangle coming into it. It closed above that 100 number. I love these types of trades on breakouts, cheap risk that I like to say, because you're buying right above the breakout channel above 100. You got a stop loss right underneath 100 using your own rules that you do. Step method system with this is a wonderful trade here on Celgene. But it was one of many trades that we had found, and we had an epic meeting, Tim, like 3 hours. And typically when I'm running that meeting, it's 2 hours. We're cutthroat. We're getting in and getting out. But we had a lot of interesting conversations on what was actually happening in that space. And I hate how tackle trading always logs me out for some reason.
I got him up if you want me. I got him up if you want me to bring him up.
Oh, I'm logging in, but as an admin, it just does that sometimes. Well, no, it does that all the time. I think it automatically logs us out for some reason. Proccar can never give me a good reason why.
To stage a coup.
Proccar is doing that manually. He's doing it to reset some of the cookies and whatnot. Believe me, I'm not an expert on admin website stuff, which is why we got guys to do it. But there could easily be a big rant right here. We'll pass on a rant, though. I will say, while you're bringing them up, though, one I love, and this one thing I love about the reports, guys, the Bears team is just as strong as the Bulls team. I'm looking at Zoom Technologies and that breakdown you guys found, and I don't have this stock on my short-term watch list, and ZM breaking it below support into a downtrend. It's like we've been saying for a long time, Matt, it's a stock picker's market. And here are two great examples, some from the Bulls team, some from the Bears team on those reports, and Zoom was grabbing my eye this morning.
It definitely was. One thing that I want to pick out, big shout out to Marquise Johnson, Coach Marquise over there at Tackle Trading. He's kind of taken over the newsletter with Coach Gino as well. Cody graduated to the Forex report. We promoted Coach Marquise over there. And Marquise, I felt, did a wonderful job writing up kind of what was happening, a look back at what was going on in the market. Obviously, a fast forward where he's kind of looking at the market, this week as well. This seasonality index to me kind of, and we put it in there all the time, but it really shows you what to expect. There's 2 times in the market, Tim, where you see some really good opportunity on the buy side. And Mark, I know you're not the biggest fan of seasonality, but to me, it's just an indicator, and you still wait for the technical triggers, correct?
Yeah, I mean, it's not that I just don't use it.
Yeah.
I just don't use it.
Okay, but I do think it's good in terms of being aware of it and how it might manifest itself in the market. Coming into mid-October, Tim, you start to see from mid-September to mid-October, price has a tendency to not perform as well as certain times in other markets. For example, coming into late February to May, we typically see the markets run a little bit better than coming out of mid-December to the end of February. This is what Coach Noah talks about all the time when he references that Santa Claus rally, about how historically coming into mid-October through mid-December, we see this rally in the market where the market has a tendency to do a little bit better than some other times in the market. So, from a seasonality perspective, that really kind of caught my eye, that we're kind of in that time period where we typically see the market do something special from a price action perspective. And then obviously you have all those as well. One thing to keep an eye on is all the way down here. If you ever want to take a look, say we have all the sectors, rated where they want to, and you want to say, okay, let's go look at those technology stocks. You can just go click on XLK right there in the broad market sectors. It'll pull up a pre-list FinViz scan where you can kind of check out the markets. And VRSN kind of caught my eye. I just want to check it out real quick. Mm-hmm. Yeah, it kind of caught my eye. Look at that nice little bearish downtrend.
Got to be quick on that one. You got earnings couple weeks, but you can swing trade it. I mean, you still
got time.
In the window. Yeah, you got 10 days.
10 days.
Yeah.
10 days of cutoff.
10 days about right there. So quick swing trade, good confirmation, all that kind of stuff. There's a lot of really good picks though, Matt. I mean, that's the beauty of it. Take your pick. I mean, the reports aren't designed to where you trade everything. You go through them. You
watch list.
Qualify. Good watch list on the weekend. You bet. I love them.
Well, and Tim, the thing is, I know our tackle community fairly well, obviously, and a lot of them use them in the step system, no doubt, from a swing trading perspective. But I know a lot of the cash flow, traders at tackle, the theta traders, they love using those reports from a bull put bear call perspective as well.
Oh, and by the way, there were 3 great volatility picks on the option report this week. I love the Netflix call. I think there's something we can do on earnings. In fact, Cody, let's make sure we do like an inverted fly prep or an MMM prep before that Netflix earnings. It's going to be Wednesday
night.
Mm-hmm.
So we'd have to do it Wednesday. Yeah, let's prep Netflix earnings on Wednesday.
I love it. Mark, what do we got to tackle trading? I got to make sure that we drop any kind of scheduling notes, things like that.
For students that are new traders, we every Monday night hold an onboarding session. Coach Frank does a great job walking through the different features of tackle trading. Whenever you're learning anything new, like if you're like me, it gets like, I don't like new things. I get a little confused by new things. Frank does a great job walking through tackle trading to get you to where you need to be. We also have a podcast released interviewing Steve Burns, if I am correct, on the schedule today. Plus got, like I said, a fun game for Matt and Tim. And I'm going to give you a little preview. We're going to start round 1 of that game right now, because I know in the next half hour, Matt won't do any research on it, but Tim, you might. And Tim, you're on a like 0 for
That's true. I will do zero research on this.
So this will be a little hint. We're going to play a birthday game where we guess people's birthdays and the individuals the closest to. For example, Tim, round 1, and you'll have 5 seconds to answer, so you can't Google.
That's not fair.
If you're going to bring up birthdays, there's no more important birthday than my brother Matt right here, the CEO of Tackle Trade.
Hey, how old guess is who I share a birthday with? Guess who I share a birthday with?
We almost got through it. Time out, Mark. Hold on.
AOC. I share a birthday. I didn't know that. Sorry, AOC, Cody.
Matt had his birthday yesterday, guys. Everybody make him feel a little red in the face. Nobody likes it here when people point out their birthday, Matt. I almost got through the whole show, but happy
Feels
birthday,
like 41.
Matt.
So Tim, I would say, how old is Matt Justice? And you would say
he's 42 years old.
And it would be like golf. So you would get 0 points, which is good. Because you got it right.
It feels like another one of those games where he's designed the rules, Matt, in a way to where he can manipulate them. Do you know my brother Mark, Matt? Have you met him?
Then how does Matt always win?
I know exactly what he does.
Oh my
These games are just a way to make him feel good about him and put us down a little bit.
Well, it's fun.
I respect it. Hey, I got a question for the crew. November beards, right? Beards are popular in November, right? Isn't there something like people grow beards in November?
No shave November.
No
shave November, right? I'm thinking about doing it. What do you think? Can I get away with it? As a public speaker, can I get away with it? I've never. This is about as far as I can ever get.
I think you could. I get the old Joe Dirt thing going on. I don't.
Oh yeah, you definitely go patchy.
I can't. I'm way too patchy. I think you could. I think.
Listen, for the last 20 years in my life, it's always been 5 o'clock, and it's always been December.
Yep.
So do it.
Think about it.
I would like it. I think you could pull it off for sure. Actually, have you ever grown a beard?
Give it a go. No,
not in your life.
I've never grown long hair, and I've never grown a beard.
Beard time. There it is. Beard City, Beard City Bernanke's. That's my
I've never gotten past a certain stage that drives me crazy. And then as a public speaker, like I've tried it on day one. I'm like, I hate it. And then I shave for day 2. And then everybody's like, whoa. You shave. I'm like, yeah, I can't take it. I'm going to give it a go. It's going to happen.
I like it. All right, guys. Thanks for being here with us today on a Monday. We're going to be back tomorrow with Delta Tuesday.
Very quickly, I can't compete with Frank from a beard perspective, though.
I don't know, man. Competition, you never know.
Have you seen Frank's?
Frank
can grow a top 1% beard.
Yeah.
Frank has Triple H hair.
Yeah.
Like he's been, wandering in the wilderness for 3 straight years type beard.
No. Frank got them good genes for that. That's for sure.
I like it.
All right. Send us out to you.
All right. We're out. Peace. See you tomorrow.